Hello and welcome back. I'm Dean Mitchell. You are watching 𝐾𝐿 TV live from Sydney. This is the last show of the day, the last trade. Let's get started with market close commentary for today. And the ASX 200 has followed Nasdaq trades in negative territory. The Australian market continued its losing spree throughout the session. Towards the end, the benchmark index ASX dropped 200 to 69.10 points and traded 6,948.70, a cut of 0.98%. All sectors traded in the red zone today. The energy was the top loser by IT and 𝐕𝐝𝐝. On the flip side, IDP Education Limited and Corporate Travel Management Limited from consumer services traded high throughout today's session. Now let's have a look at some significant market highlights on Wednesday, and gold prices increased and hovered near the 7-week peak. The retreat in US Treasury yield and stocky dollar added helped gold prices to inch up. The dollar index declined by 0.1% against other currencies, and benchmark 10-year US Treasury yields fell below 1.6%. Silver was down by 0.3%, platinum declined 0.4%, and palladium increased 0.6%. And now let's move on to the latest updates from the Asian markets. And like other parts of the world, Japan is witnessing an increase in cases. Amid the fear of reimposing new lockdown restrictions, the economic reopening seems to be in troubled water. Today, Japan shares continued their decline amid the increasing worry of new restrictions. In the previous session, the broader topics witnessed the deepest cuts in nearly a month. Today it fell by 2.24%, and Nikkei declined by 2.23%. Japan lags behind in vaccination rollout program compared to other nations. Japan vaccinated nearly 1% of its population, whereas South Korea vaccinated 2.9% of its population, and Western countries, the United States and Britain, gave jabs to a minimum of 40%. Quasi-emergency measures are implemented in some parts of Japan to curb the spread of the virus, and on Tuesday, Osaka urged full emergency declarations. Moving on to some important Australian highlights, and as per the initial retail trade data, Australian trade turnover increased by 1.4% in March, which is seasonally adjusted when compared to March in the previous year. Turnover increased by 2.3%. Ben James, Director of Quarterly Economy Worldwide Survey, confirmed that after the lockdowns impacted the retail sales in Australia in February this year, Western Australia and Victoria led the rises, and the ABS report today stated the average private household income stood at $2,117 per week, which is stable compared to September 2019. Some other important news now. Police officer Derek Chauvin has been found guilty on all 3 charges of murdering George Floyd. The most serious charge carries a minimum of 40 years. However, Mr. Chauvin is unlikely to face this, as guidelines are in place for criminals which have no records, which suggest a sentence of 12.5 years. The sentencing phase is still to happen and is scheduled for 8 weeks. Reaction to the verdict has been swift from across the globe, and George Floyd's family spokesperson has said, as he choked back tears at a media conference directly after, that the verdict, that they had faith a conviction would happen. Genomic sequencing has shown the vaccinated Auckland airport worker who tested positive for COVID-19 has the UK strain, and the likely link was from a passenger who entered the country on April 10th. The Ministry of Quarantine worker is on the front line servicing aircraft arriving from high-risk destinations. The workers' close contacts have been contacted and all tested negative. An investigation is underway, but leaders from both countries have said the Trans-Tasman bubble, which commenced this week, will not be affected. Apple have made major announcements overnight with the launch of a new range of products with a focus on the working from home market. There are 2 new iPads, brand new AirTags to track your lost items, and a new 4K TV. The $45 Australian AirTags will be available from the 30th of April, and all other new products are to be released in the coming months. And now the shares for today. The share price of Traffic Technologies rose as much as 6% to 0.053 as the company stated that Unit Quick Turn Circuits, or QTC, has secured export orders from China, Singapore and Qatar. It said contracts are for the supply of traffic controller equipment and associated software to the value of 1.7 million Australian dollars. By the end of the day's trade, Traffic Technologies Limited gave up some of the gains and was up by 2,000%. Financial research firm Citi sees the US market as a major force behind the growth in earnings for ARB Corporation Limited. Citi estimates ARB's partnership with Ford to develop custom parts for Bronco to be up to $5 million Australian annual EBIT opportunity, which equates to 4% of financial year 21 group EBIT. It stated the analysis of ARB's US customer reviews indicates that the brand is healthy, with customers evaluating the appearance, functionality, and design of the company products. The brokerage estimates increased US distribution to authorised resellers could represent an EBIT upside. Morgan Stanley says that after nearly a decade of no major LNG products sanctions in Australia, energy firms appear to be on the cusp of greater energy spending. It adds M&A success or failure is likely a driver of energy equity performance in 2021. Further, it stated Woodside Petroleum needs to sell down 50% of Pluto trains to progress its Scarborough development, and a new CEO needs to be on board with the strategy. The research firm does add that the balance sheets are likely to be a key investor focus, with Santos appearing to have the most flexibility given its lower credit rating and spending plans. A key potential catalyst for oil surge is selling down its Alaskan assets. It adds that the brokerage firm, meanwhile Morgan Stanley, reduces price targets on its Woodside Petroleum to 26.70 Australian dollars from 27.20, on Origin Energy to 4.56 Australian from 4.88, and raises it for Santos from 8.25 to 7.90 for Beach Energy to $2 from $1.90. 𝐊𝐚𝐥𝐤 Limited, which got listed 4 months ago, slashed financial year 21 forecast for revenue and annual contracts, as a large number of customers in April switched to consumption and software as a service from subscription licenses. The shares suffered sharpest fall since the 26th of February, with volumes being 1.5 times their 30-day average. 𝐊𝐚𝐥𝐤 Limited now sees annual revenue between 180 and 185 million Australian from the earlier forecast of 193.5. 𝐊𝐴 also revealed that customers are switching to more people working remotely than in the office. However, 𝐊𝐴 sees financial year EBIT data strongly higher between 64.6 and 66.6 compared to 63.6 due to fewer employees, lower travel and currency benefits. ASX listed data backtracked data development from Emria Limited, which announced that it had secured 5 million placements aimed at advanced drug registration and expanding its product pipeline. While the ASX 200 was down during the afternoon session, a few ASX-listed healthcare shares were performing well, trading in the green zone. These stocks do include Ecofibre Limited, which was up 9.999%, First Group Limited up 9.523%, and IDIT Australia up 6.060%. The global mining behemoth BHP Group shared its quarterly production figures with the market, and the mining major achieved record thermal coal and petroleum production during the March quarter. BHP has kept the guidance unchanged for most of the commodities, except for the copper and coal, which are revised. BHP achieved record production from its Western Australian iron ore project, and total iron ore production stood at 59.9 megatonne for the quarter, 4% lower than previous. Production was partially impacted by the weather conditions and planned maintenance work at the ore handling plant and stacker at the Newman project. Financial year 21 production guidance is unchanged and is kept in the range of 245 to 255 megatonne. BHP Group shares dipped by 1.939%. That is all for now. I'm Dean Mitchell. We will see you tomorrow live from 10 a.m.